home affordability index is crashing in this country, right? What has happened? Due to the inflation that we created, right? We are in a horrible position for people who are starting their lives, let's say a couple of 30s, to go buy a home. Home affordability index has been the lowest in the history of this country. But now that lack of affordability is kicking in. How's that kicking in? It's kicking in the home inventories, used and new home inventories, going absolutely through the roof. New home inventory in southern U.S. officially above 2007 levels. So what's happening is that, builders have to build. I mean, they have the land. They made plans 5, 6, 8 years ago. They just build. Well, but when the affordability index is going this way, well, one of the main reasons the affordability index is going this way is because of interest rates, right? When we had the ZIRP policy, zero interest rate policy, mortgages, 30-year mortgages were like, I don't know, 3.5%. I've seen it as low as 3, but let's say an average 3.5, 4. Well, now the same mortgage is 7, 7.5 because they raised the rates from 0 to 5. Well, that's major part of it, right? But the other thing that has happened is the prices. Because of inflation, right? I mean, one of the inflation hedges in my world is hard assets, right? And what has happened? Home prices have gone through the roof. The average home price in the country right now is $400,000, median price, $400,000. It's insanity, right? And then with the higher mortgages, the servicing of that debt is not easy, even if you have a 2-income household. So my thing is, I'm seeing a definite correction in home pricing. Now, I think the affordability index is actually going to roll over and start getting better. The reason for that is, on the previous segment, I talked about lower interest rates. Well, when they start lowering the interest rates, what happens? Mortgage rates start to go down. And conversely, the affordability index is also going to improve, right? So it's going to be a buyer's market going forward. The reason is, look at the inventory of homes that are not being sold. One, for the affordability index, and two, the supply keeps coming, right? And to me, I think the balance is going to get normalized. Is it going to take like some time? Absolutely will. But if you look at all these lines on the chart I put up, in the South, we're at the 2007 level. In the West, we're literally at the 2007 level. The only place, because the affordability is still decent there, is the Midwest and the Northwest, because the prices have not skyrocketed like that. But I know from West Coast, right? I mean, ridiculous, right? Every house now in California is like, the median home price in California is $800,000. How can you afford a house for $800,000, even if you're making a couple $100,000 a year? You can't. You really can't. So, there are over 450,000 new homes for sale in the southern U.S. Southern U.S. meaning Florida's and Texas's, right? And so on the new home front and the existing home front, right, the inventory is building. So when the inventory builds, what happens? It's like supply and demand. Well, the sellers have to start adjusting pricing. So that will help the affordability index. The second thing is rates are going to start backing off. That's going to help the affordability index. But then it's going to take, this cycle is going to play itself out by reduction of home prices. I mean, I'm not calling it a crash, but there definitely will be a reduction of home prices, specifically in the South and the West, to the tune of probably, I don't know, 10, 20%. And if you're in the market to buy a house, after a few rate cuts, when the mortgages go back to maybe 30-year mortgages go back to, 5.5%, after 6 anticipated rate cuts by the Fed by the end of next year, and the prices, correct a little bit, I think that will be a good time to buy a house. If you're thinking of buying a house, probably by the end of next year, you'll have a better chance of, getting a roof over your head.